Great to have your company on 𝐾𝐿 TV. Thank you for joining us, and this is Sage. You're watching the buzzing trends. Even as the coronavirus pandemic resulted in job losses and hit businesses of recruitment companies, there are a few firms that managed to do well despite the challenging times. So in today's show, we'll throw light on some ASX companies and sectors that hired in response to the pandemic, and the companies that stood strong against the pandemic tide were 𝐊𝐸, People Infrastructure, 𝐊𝐸𝐴𝐚 and the 𝐠₂ People. Now, for firms in the technology and telecommunications sector, the pandemic presented an opportunity to boost their capacities, I should say. There was an increased demand from company employees working from home for long hours, and hence the boost. And even the retail sector, which saw layoffs earlier, returned on track as the time elapsed. Now, all this happened as many companies shifted to selling online. So without any further delays, here are a few ASX-listed recruitment shares to look at before the COVID-19 lockdown uplift. And the stocks have been selected based on recent positive announcements by their respective companies. So the first company we're going to take a look at is 𝐊𝐸, which trades on the ASX as 𝐊𝐸𝐴𝐚. 𝐊𝐸 provides online employment services, advertises jobs, banners and candidates curriculum vitae services. Shares of 𝐊𝐸 have given a year-to-date return of 16%. And meanwhile, the past year return stands at 71%. In its full year results for the period ended 31st December 2020, 𝐊𝐸 announced a minimal revenue rise from the corresponding period last year. And meanwhile, the net profit after tax was up by 58%. The company reported record ad volumes in the second half of the year amid easing COVID-19 restrictions, with Australia and New Zealand as its strongest market during the year. And the next stock to look at is People Infrastructure, that trades on the ASX under the ticker code PPE. Australia-based workforce management and staffing company provides solutions to cater to workforce challenges faced by businesses. Shares of People Infrastructure have given a year-to-date return of nearly 15%. The past year return stands at 51%. The company reported strong growth in the financial year 21, while the revenue rose 19%, the EBITDA climbed 33%, and the company acquired eCareer and Illuminate, SwingShift and TechForce and Vision Surveys in the financial year 2021. The company has plans to tap more acquisition opportunities in staffing and managed services to boost geographic spread and further expand its service offering. Now, moving on to the next stock, 𝐊𝐸𝐴𝐚. This company trades on the ASX under the ticker HMI. 𝐊𝐸𝐴𝐚 is a technology-driven recruitment and full-service labour hire company. Shares of 𝐊𝐸𝐴𝐚 have given a negative year-to-date return of nearly 15%. In its preliminary final report for the year ended 30th June 2021, company's revenue witnessed a marginal rise. And at the year's end, the company had $4.2 million in cash reserves. The company would use the cash reserves to boost its growth strategy as it works to bring advanced AI or artificial intelligence to the recruitment space. Now, lastly, we'll take a look at 𝐠₂ People, which trades on the ASX as 𝐠₂. The 𝐠₂ People delivers tailored employment solutions to businesses, government and individuals. Shares of the company have given a negative year-to-date return of nearly 22% in its June financial year 2021 quarter activities report. The company reported positive net cash from operating activities, and the company had $6.4 million cash and cash equivalents at the end of the June quarter. And the 𝐠₂ People also reported an increase in job orders across all operating states and strong tailwinds in key operating sectors. It also saw a jump in receipts from customers due to the inclusion of the Hunter executive into the group for the full quarter. That is all in today's short and sweet buzzing trends show. I hope you found the show informative. Please stay tuned for all such stock-related insights only on 𝐾𝐿 TV, and this is Sage signing off.